Now, you've also got to remember a couple of other things that has benefited the US in terms of inflation. Many people will be thinking, we've won the war against inflation. You absolutely haven't. You've had the first stage. So when you got the 3% number, you were comparing it with a year ago, which was very high. So you have what's called basing effects. If I'm accelerating and I'm going late into a curve of accelerating, I was already going fast a year ago. If I stop comparing when I only just started, when I was stationary, obviously the comparison slows down when I compare when I was running at my faster speed. It's difficult to be running that little bit faster. So you are 3% higher year on year on an already high number that had surged to 9 in the year before. So this is a basing effect. That doesn't mean you won the war. It means the rate of acceleration is slowing. But if I'm in my Porsche Turbo going down the Autobahn, going up to 300 k's per hour, my rate of acceleration is quickest as I do the shift from first to second. It's not during the shift from fifth to sixth, accelerating the most, but my speed is still climbing. So this is the important thing. It's a first derivative of speed, acceleration. So the year-on-year comparison is actually more a benchmark of acceleration of inflation. So you've slowed the acceleration of inflation. You haven't slowed the fact that prices are still getting more expensive, just at a rate of 3%, where before it was 9%. So they're still getting more expensive. Those things are still going up. This is repeated on the Australian dollar, by the way. You can go the whole shot. And in fact, we have a breakout against the Chinese yuan here for gold. So you actually got upside breakouts of that volatility nature that we described over here. I'll buy a bit more real estate and extend that. This is a breakout, and we expect to see, this number won't mean anything unless you're in China, but it's going to be about 114,458 won. So this is another squeeze that's happening. So gold is now getting its groove on again, cross currencies, including a big producer currency for many of the things that you buy.
Got it.
Which is difficult.
So really the question is that we're breaking out now, gold is breaking out now with all of the currencies. What is, and it looks like we're a little early. I did an interview with another guest probably 8 weeks ago, and we talked about the gold will more than likely move sideways, and in August, maybe mid to late August, we'll have our liftoff, if you would, or just the seasonality of it. And you were saying, and the charts are really saying, not specifically you, but the charts are saying that we're early here. We're breaking out early here. What would you say is, how long is this would last, or are we looking to explode higher? And what's your upside target now?
Yes, there's a lot in that to unpack. So first of all, the person who said that is usually right, that you tend to get a doldrums. But unfortunately, there's not much rest in the world during this summer because of the excesses. So there are a number of things that are slowly unwinding at a rapid rate, and it's going to force intervention and attention a lot sooner. So I think that's been brought a little bit forward. We have the gold and silver ratio over here, for example. That was a big sell-off. So you want this chart to go down as a gold and silver bull. We talk about this entire right shoulder here that's on a huge head and shoulder with that thick line. We call this a broadening structure. So typically these break down. When you've been coming down as you were into that and you have a broadening structure, you're getting more volatile. What tends to happen is you get a real slap in the face, as we call it, a strong sell-off, and then you get a final move setting up to break this lower basing ascending grind line. And when that breaks, we think you run for that neckline, which is 65 valuation on the gold silver ratio. So you're going to fall out of this 80s range that you've been stuck in. You've actually been quite range bound for a while, but you have been tightening. If you look at it over here, you've been quite range bound. And what starts to happen is these sell-offs get more brutal and you start to hang heavier. So again, you're getting compression.
Yep, that's exactly what's happening as we talk. You're getting
across these highs like that. And that leads hard on you, and you end up getting a strong down move. That's a right shoulder, that's a head and shoulder, and then we see that taking you all the way down to the 30s. So we see a 2,900 gold next leg target. That's not the end of the bull market, but a next leg, and we think that's starting to develop. And we see going with that 45-50 range for silver. again before it rests significantly again. So there's some real good action to come potentially. The key triggering event will be the break and let go of this grind line and the heading down to 65. And that will be disorderly. It'll come fast. So if you're not in it, you'll end up a chaser. Don't be a chaser. Cars, dogs chase cars. We're not dogs. And you want to stay out of that. Don't be a momentum chaser. So be early. So if we look at silver in of itself, there's a bit of a head and shoulder that we've been talking about over here. And we expect that $26 to be a triggering event. And that's your 45 and your 38 targets that are generated by that. So that head and shoulder to take you to around the 38 zone and a 45 run. That will correlate to gold being approximately 3,000 and roughly a 65 neckline valuation. So 65.